What does Greenland have to do with the price of gold? On the surface, not much. It's a barely populated island of less than 60,000 people, covered in ice and far from the centers of global finance. But over the past few weeks, Greenland has become an example of how the United States uses leverage today, not just militarily, but economically, and how markets respond when that leverage is displayed.
– 2025 marked a clear shift in what drives gold and silver. Precious metals have become less reactive to Federal Reserve commentary and routine economic data, and far more sensitive to policy decisions and geopolitical signals. That means politics is no longer a secondary consideration for gold, it's central. At the start of this year alone, markets have had to digest developments tied to Venezuela, Iran, and shifting trade policy. But among them, Greenland stands out. The situation has the potential to influence precious metals both immediately through market volatility and structurally through longer-term changes to alliances and currencies. To understand why, we need a bit of context. The modern world order has been shaped by American military and technological dominance since the end of World War II. That dominance was driven by control of transformative technologies. From nuclear weapons to air power to the internet, each technological leap reinforced US leadership and shaped global finance along with it. Artificial intelligence is the next such leap. It is widely viewed as a force multiplier for economic productivity, military capability, and financial influence. But to lead in AI, nations need two inputs in abundance. The first is energy. AI consumes a massive amount, and there are only a few nations with enough cheap, reliable energy to pursue AI development. The second are the resources needed to build the data centers and terminals for AI deployment, which includes rare earth metals. These metals are abundant in Greenland, and also in China, who maintains dominance over the mining and refining of these metals. The US ranks a distant 7th place in rare earth mine reserves. The United States' interest in Greenland is about more than military positioning, even though the military case on its own is substantial. The Arctic remains the primary avenue through which both Russia and China could project force toward the North American continent, and Greenland sits directly on that axis. From an American defense perspective, maintaining strong control and visibility in the Arctic is not optional. But in geopolitics, nothing happens for only one reason. Military logic often provides the public justification, while strategic and economic objectives carry equal, if not greater weight beneath the surface. With that context, the stakes around Greenland become clearer. This is why it is now at least understandable that a US president would apply extreme pressure to a NATO ally over territory. The strategic calculus has shifted. Securing energy, resources, and technological primacy, particularly in areas tied to AI and future military dominance, is increasingly viewed as more critical to US interests than preserving alliance norms that were designed for a different era. And whether one agrees with that trade-off or not, it reflects a reality that has been building for years. NATO is not symmetrically beneficial. The United States provides the military backbone of Europe. If American support were withdrawn, Europe would be left without an independent defense architecture capable of operating at scale. Decades of underinvestment have hollowed out European militaries, energy systems, and industrial capacity. Logistics, airlift, missile defense, intelligence, and the nuclear umbrella have all been planned around US participation. Remove the United States, and gaps emerge immediately, not hypothetically, but operationally. That brings us back to Greenland, and to Denmark specifically. Denmark's military numbers roughly 20,000 personnel, smaller than the New York City police force. When President Trump pushed for the United States to take control of Greenland, Some interpreted that as a credible threat of force. But this is where the narrowing of options matters, especially for markets and for precious metals. There is little Denmark could do to resist the United States militarily, and the broader NATO alliance is similarly constrained. A forceful takeover would likely fracture the alliance, but it would not materially weaken US homeland defense. Only a handful of American bases in Europe directly serve US national defense. Most exist to stabilize Europe itself. For that reason, an outright military move and a total collapse of NATO has always been unlikely. And recent developments support that view. A framework for negotiation has now been discussed, lowering immediate tensions. But even a contractual resolution does not undo the damage already done. Tariff threats, public pressure on a NATO ally, and the willingness to test alliance boundaries have introduced lasting friction. That friction is important for gold. The alliance is no longer assumed to be unconditional. It's becoming transactional and contingent, and that erodes confidence in the stability of the existing world order. In the short term, that uncertainty drives demand for safe haven assets. The longer-term consequences are structural. Europe has steadily eroded its domestic energy production in favor of ideological goals. Societies that intend to manufacture, whether for industrial growth or military security, require large amounts of cheap, reliable power. Combined with heavy debt loads and chronic underinvestment in defense, Europe has limited options in responding to American pressure today. To have meaningful leverage now would have required very different decisions 20 years ago. That leaves economics as the most viable response and de-dollarization as the most obvious tool. We're already seeing early signs of how Europe may respond. A Danish pension fund recently announced it was exiting US treasuries, citing concerns over America's budget deficit, a move totaling roughly $100 million. While the decision wasn't explicitly linked to Greenland, the timing speaks volumes. In politics, signals are statements. To be clear, Europe cannot unwind its exposure to the US dollar or treasury market overnight. Any move away from the dollar would be gradual, deliberate, and framed around risk management rather than retaliation. But that's exactly how de-dollarization works. A slow reallocation at the margins. Europe remains one of the largest external holders of US debt, which makes treasuries the most practical economic lever available to them. Even modest, incremental shifts in reserve allocation or trade settlement reduce demand for dollars over time. The impact isn't dramatic in the short run, but it compounds. That slow bleed affects gold. A weaker dollar mechanically drives higher gold prices. And when the dollar buys less, it takes more of them to purchase the same ounce of gold. In the near term, gold responds to instability. When long-standing assumptions are tested, investors reach for safe havens. In the longer term, gold benefits from structural changes, de-dollarization, rising borrowing costs, and the growing willingness to use financial systems as geopolitical tools. Regardless of how the Greenland situation ultimately resolves, those dynamics are in motion. Demand for energy, resources, and technological dominance hasn't slowed, and neither has competition between major powers. That combination, geopolitical friction layered onto structural monetary stress, creates a favorable environment for gold. And that's all we have for you today. Please remember to like, subscribe, and share with a friend. Thanks for watching. We'll see you next time.